Gonna be going from tips to pips, baby. And it's up. Like, y'all gonna see me. Y'all gonna see me. Y'all gonna see me. What's up, YouTube? It's your girl Ashley, aka Black Hippie. Welcome to the channel today, guys. I'm here to go over some vocabulary words today, and also just post some more content on my YouTube for people who are just in my space, want to be around me, and obviously you guys want to hear me teach some things. So I'm definitely going to be starting to put more stuff on YouTube, but I just want to make sure that I'm walking with honor, dignity, and truth, and really taking this knowledge in and being a serious Forex trader. Nothing about like MLMs, nothing about subscriptions, none of that. I really want to pursue this Forex career and take it serious, right? And really start, as my mentors say, empowering people around me to do the same, so welcome to my lovely abode. I forgot to grab my sage before starting the video, but just want to send some good vibes, good tribes, and good chi in, bad chi out. And we're just cleansing the space and bringing nothing but positive energy in here. Because why? 852 is the frequency of love, and that's what we're built on, guys. So welcome to the channel. Like I said, my name is Ashley Williams. I'm a 4-year intermediate trader, and my favorite quote is work harder on yourself than you do on your job. Because why? Your job don't care about you, okay, unless you're clocked in. Right? So clock in, show up for your job, but still come home and work harder on yourself. And I'm still tackling that till this day, right? It's an ongoing process. So let's get this party started, people. So like I said, we're going to be covering vocabulary words if my computer goes. So back to FX basic vocabulary. We're going to just be going over some basic words. So Forex terminology, Forex. A lot of people haven't heard about Forex because why? I can say myself, we were common folk, and I just never heard anything about that. I just knew about stock market and all that kind of stuff because they show that on TV, right? The television. Okay, so Forex terminology, a different language at first. The first foray into trading foreign currencies can be a little confusing as there are terms that are never used outside of Forex trading. We will go over the major terminology we will need to understand to be successful at foreign currency trading. So currency crosses. Sometimes you might see people talk about, oh, I was trading GBP JPY, Euro JPY, USD JPY, USD CAD GBP. I think there's stuff like that. There's so many currencies. And so when you hear people talk like that, that's called a currency cross. So let's look at the example on the screen. Pairing up your currencies to pair trades, right? So you have one currency on the left and another currency on the right. This is called a currency pair or a currency cross, right? So on the left-hand side, we have euro, which is equal to the euro dollar. Okay, we think about the United States dollar, that's what they call the euro, their dollar in Europe, right? Then we have JPY, which is on the right, aka called the yen. Like we said, if we call our dollar the dollar in the in the United States, and Japan, they call their dollar the yen. So there's different names and terminologies for currencies out there. So as you become more advanced in your trading career, you'll start learning more of the names, but we're just going to keep it real brief today, right? Okay. So just like us technical traders, we look at our pair to discover or to analyze to see and determine if one currency pair is going to be stronger than the other. So let's read the first passage of the euro. In your analyze, I cannot talk. In your analyzation, why am I cannot talk today? You have determined the euro is showing strength and will likely to go higher, right? So in my mind, I'm looking at the charts. I see that the euro is having really good strength, meaning I feel like it's going to go up. Then if I'm reading the second passage, the yen, all right, I have determined that the yen is showing relatively weakness and it will go lower. So I'm betting against the euro that the Japanese yen dollar will fall. So I can make money either way. The great thing about Forex, you can make money buying or selling. You just got to understand the market, at least the technical side of it. There's fundamentals and all that kind of stuff, but we'll talk about that down the line. So we have major currencies in the market, just like there's top name brands, there's top companies, we have top currencies. Major currencies are those in which the most of the world's foreign transactions are dominated. Obviously, we know the dollar is one of the top currencies as well, along with the NCD, New Zealand dollar, the AUD, the Australian dollar, the CAD, the Canadian dollar, and you can't really see down here, but if I keep moving it, GBP, the Great British Pound, the Euro, the Swiss franc, and the Japanese yen. They're one of the most popular currency pairs to trade. So we're still on currencies, guys. So now we're talking about the base and the quote. Okay, just like how I was talking about the Euro and the JPY, this is the same example. Now we're just trying to understand the word behind the word, right? So GBP, we call that the base currency, and the quote, the currency to the right is called the quote. So for the base currency, right, let's look at GBP. The base currency is the first currency stated in a currency pair quote. For example, in GBP USD, the Great British Pound is the base currency. So that's the main major currency. The second currency is the quote, the USD, right? Which states how much the quote currency is required to buy 1 unit of the base currency. So let me sip my tea, y'all. Chamomile. So the quote, so let's get it in our mind. I'm from the United States, obviously, and we're going over to London. I have $1 whole. Oh, I can do the example right here. It's my manifestation dollar, but it'll work. It's a little oily because I put oils and money oil on it. So excuse me, y'all. I'm spiritual. Don't mind y'all business. Okay, so I have $1 whole, right? I'm going to London with my $1 whole. If I give this $1 whole to the exchange lady or man, right, they just might hand me back $1.75 in Great British Pound money. So what does that mean? For every dollar, I could get back $1.75, which is my base, right? So that's kind of a little small example of currency exchange, right? Some currencies are worth more than other currencies. That's why you can get more money back from a currency than you do from certain currencies. All right, now let me put my little manifestation money back, honey. I need all the money I can get, okay? All right, y'all, so let's keep rolling. Okay, so we do something called buying and selling. We buy and sell all the time. Foreign exchange is no different. So in the in the Forex market, currencies are always priced in pairs. Remember the base, the quote? Therefore, all trades result in a simultaneously buying of one currency and selling of another. The objective of currency trading is to buy the currency that increases in value relatively to the one you sold. My baby's at the door. If you have bought a currency and the price appreciates in value, then you must sell the currency back in order to lock in profits, right? Buy low, sell high. Remember, I know we've heard of that before. Buy low, sell high. All right, so these are just a couple of different ways to just understand the market. So we have some terminology. Like I said, we're going to keep going over. So bid rate, the rate at which a trader is willing to buy a currency. So when I get into the market, I'm marking up a chart. I want to get right in where I see prices at a sweet spot. So that's my bid rate price, right? That's my bid rate. That's where I want to get price at. Now, my ask rate is the rate at which the financial instrument is offered for sale. So let's say I took it for a long, I took it for a buy. I want price to go to 1.1.555 and I'm at 1.1500. So my ask rate will be 1.15, whatever, right? that's my ask price. If I'm here at 100 and my ask rate is at 500, that's what I'm asking instead of bidding against bidding at 100, if that make kind of a little sense. Okay, so next word is spread. The difference between ask and bid. So we use something called a broker. A broker is the person that lets us put our money into the market so we can take part in partying with the big dogs, right? So the spread is the difference between the ask and the bid. Obviously, I just said that. And the spread is where the broker's way of making money. So that's why people be like, oh, I want a tight spread, or I want to tight this. Is because us scalpers, we want to get in and out the market quickly. I'm a scalper as of right now. I want to get in and out the market as quickly as possible. And I want to use as little money as I can to use, right? I want to have low leverage, tight spreads. And if I have to have big spreads compared to a tight spread, I think I'm going to go with the tight, right? It saves more money. I get y'all trying to make y'all money, but honey, I'm trying to make it too, right? Okay, let's keep going. So percentages in points, AKA pips, right? That's so cool. The unit of measurements to express the exchange value of currency pairs. Pips are counted in the fourth decimal place of a pair's price. Except for GBP pairs, it's in the second decimal place for GBP pairs, okay? So we can look at the example over here where we see a pip value of, let's just say it's a USD pair, okay? It's from the fourth decimal place. So we start here like back in old math, go over 4 decimal places, right? I think you start here, excuse me. 1, 2, 3, 4, right? Simple, but you still, they'll come with practice. GBP, JPY, the second decimal, 1, 2. So when you see JBP pairs, obviously it's always going to be a little bit different from regular pairs, but just try to be conscious of that. Obviously, as we grow in this space of Forex, I can help you guys out with that more but I just don't want to hold up the PowerPoint for too long. But this is just a brief example of what you'll be getting into, right? So some more vocabulary words, lot size, right? Lot size, the number of currency units you will buy or sell. So I might take a lot size of 10 cents, which was equal to 0.10, or no, excuse me, 0.01, or a lot size of 2 cents, 20 cents is 0.02, or I want to take a lot size of $10, that will be 1.00. So there's so many different lot sizes. You can go up to $100 a lot size. I mean, Forex is amazing, right? So long position, we think of buy in this space, right? A position that appreciates in value if the market prices increases. When one buys a currency, their position is long. So when you hear people say long, just think of buy. Now let's think of short. Short is to sell, an investment position that benefits from a decline in market price. When one sells a currency, their pair is short. So when we think of short, we think of sell. When we think of long, we think of buy. I thought this was actually pretty cool. I never heard this before. A chartist, an individual who uses charts, graphs, interprets its historical data to find the trend and predict future movements. Also referred to as a technical trader. That's me. And also the other lovely ladies that are on the call. We are chartists. We are technical traders. We don't really do with fundamentals. We'll actually cover that here in a second as well. Come on. No, I'm playing, y'all. So let's talk about the different types of orders we take as Forex traders. We have different types of orders. Sorry, these boxes be in the way for Zoom. So boom, types of orders. We have market order. Oh, I should have moved that word over. But we have market order. So orders for opening a trade at the current price. Buy market or sell market. So this is like current. I'm getting into the market right now. I see a buy. I'm bidding. I'm in it right now. Then we also have something called limit and stop orders. So what that means is fulfilled under predetermined conditions. For example, and open a buy position when the asset reaches a certain price. Buy limit, sell limit, buy stop, sell stop. All right, so we're going to cover the last word here. Stop, right? Close. A position with an asset reaches a certain price. Stop loss, take profit, or trailing stop, right? So stop, take profit is when we take profit. Once we hit in profit. Stop loss is when we're not really so much in profit. We are taking I wouldn't even call it a loss, but a learning lesson and losing a trade. So that's a stop loss. And then trailing stop is when I'm in profit and I'm following current price so I can not go back into the red of a trade, if that made sense. Okay, so just like how we talked about, there's different types of stop. Let's talk about the buy stop. This image probably isn't the best, but I might do it again because I can't really read the words here. But a buy stop, order placed above price and price keeps going. So buy order, if I see that price is going to eventually go up, break a structure level to the left going long, right? And I want to catch that buy, I can place me a buy stop. So when price keeps coming, it'll just hit price and trigger it and keep going until it hits my TP. It's just like that for the sell stop, okay? I see price might be breaking a structure low. I'm going to set a sell stop below price. I'm waiting for price to come down, to hit price, hit my sell stop order that I have, trigger it and continue through price and hit until it hits my TP, right? That's a buy stop and a sell stop. Now, a buy limit and sell limit is slightly different, right? Let's read the description. Order placed above price and price then goes up, okay? So let's say the example of a buy order. So we have a buy order. Okay, we can use the example of a breakout retest, okay? For my people who are in class, you understand what that is, breakout retest. So for a buy limit, price is up here, this hand, price is up here. I see price had broke out of an old previous structure level. Price has breaking out, now price is up here. I want price to come down to this buy limit I have, trigger it, bounce up and continue upward, right? So buy limit, right? Bounce up, bounce down, bounce up. Okay, think about that. The same sequence, but for a sell. My sell limit's here, price is here. I want price to go up, hit it, turn around, and go back down, right? So hopefully that was an okay description, but those are the difference, right? Buy stops, sell stops, I want price just to go straight through it and can trigger. Buy stops, buy limits and sell stops, I want it to hit, bounce off, continue, or hit, bounce off, and continue, okay? Next, types of orders. We're still talking about the types of orders. So back to market order, the execution, market execution. To properly to properly use orders, you need to learn what a Forex order is once and for all. In short, it is the order to execute a specified action. Buying or selling an asset depends on the order type. It can be executed immediately or when traders' conditions are met. Okay. Next order will be a pending order. Those are your buy stops, your sell limit, your buy limits, right? So pending orders, a pending order in the market is, a pending order is a market order that is filled with the market, that is filled when the market meets a certain condition. For example, a trader doesn't want to waste time manually opening a buy position. Instead, they can place a pending order in which it will be automatically triggered at the desired place. The difference between the market and pending order is that they are executed. The former are executed immediately, while the later, under certain conditions, type of pending orders limit. I can't see right here. I cannot see. Sorry, guys. Limit orders, stop orders, or stops. I can't see because of the Canva thing, but let's keep rolling. All right, so now we're over the orders. Hopefully that was a decent briefing of what that should be. Now we're going to talk about the different type of traders. What kind of trader do you want to be in this space, right? So we have an example that I found that talks about 4 different type of traders, and we're just going to read through each. Okay, so we're here. Each trader has its own trading style, instincts, and approach in the Forex market. We will list 4 types of traders here to see how each type behaves. So position trader, this one was new for me. So position trader, a position trader waits longest to receive a return. It takes them a day, week, month, or even years to close their position. Use a combination of fundamental and technical analysis. Position traders concentrate on a long-term opportunity. Okay. Next, we have the swing trader. Okay. This type of trader holds their position for several days. The opposite of a day trader, a swing trader waits longer to receive a return. They often hope for a change in directions and swings back the other way using technical analysis and related tools. So that's your swing trader. Now we have our day trader. Okay. Day trading. Trading for a short term results. A day trader starts trading from the beginning of the day and finishes with either a profit or loss. A day trader does not hold their position overnight. Okay. Last but not least, we have the scalper. Okay. Scalper, if you're into fast-paced trading, the scalping strategy might be right for you. A scalper holds onto their trades for a few seconds, a few minutes during the busiest time, or even a few hours. Let me say that as well. No more than like an hour or two, though, for I guess you could say scalpers. Busiest time of the day. Their main goal is to amass a small amount of pips as frequently as they can. This trading style the trading style may not be as sustainable for beginners traders, as it requires deeper market knowledge and assessment, which does make sense. You really got to get honed in on a really good strategy to be a scalper, understanding your rules, understanding to take profit, not to hold it. If you're going to be a day trader, swing trader, hold your trades. But if you're going to be a scalper, you got to be in and out. Take that little $60 and keep moving, right? Okay. So types of traders again. Let's talk about the technical trader and the fundamental trader. Okay. All right. So first passage here. Fundamental analysis understands patterns in the company financial performance, tries to predict performance using financial statements, is predominantly, don't even know how to say that word, for a long-term investment, depends on financial statements, brokerages, analysis, and news reports. So that's fundamental. They deal with more company data, world news data than technical traders. So let's read about technical trading. Technical analysis understands patterns in the company's share price, assumes historical patterns in the share price will repeat in the future, understands for short-term trading, depends only on stock prices or Forex prices, charts, and market volume. All right, we just got a couple more examples of fundamental and technical, right? Because there's a difference. There is. So fundamental, values calculated using various economic factors. That's fundamental. Technical, we use price movement patterns on the chart to predict future price movement, right? Fundamental traders for data form, they use economic reports, news events, industry statistics, right? For technical traders, we use chart analysis. For assets, for fundamental traders, when price falls below or above an intricate value, okay, technical traders, when we see a price formation that a high probability of moving into profit in the near future, okay, types of traders usually are long-term positions for fundamental traders because obviously they deal with news and all that kind of good stuff. And then technical traders, we're usually swing traders, short-term traders, day traders, scalpers. Times, they're often for days, how long they hold their trades. Fundamental traders hold it for days, weeks, or even months. Technical traders can be long-term as well, but takes positions for days, minutes, or even seconds. Okay, consecutive concept utilized is report. I don't want to move my mouse, but it's the last box, right? Report expectation versus actual outcome. Current news event compared to historical event. For us technical traders, we use trend lines, support and resistance, supply and demand. There's more here, but the box is in the way. I think patterns and stuff like that. Yeah, price patterns. Okay. So guys, that was just, like I said, a short, brief overview of just small vocabulary words that I thought would be fun to go over. So until next time, peace, love, and light, people, and I will catch you guys on another video. So thank you.